Let's kick off with your view on the shilling. We know that policymakers have said that they would actively intervene in the markets in order to stem the volatility that we've seen in the interbank market. We know that the weighted average interbank rate has come down significantly. It's sitting at 10.3%. It was sitting at 12.7% last week. Do you have a sense that the volatility and the tight liquidity situation that we've seen in the interbank market is coming under control right now?
Well, thank you very much. Definitely, just like you observed, you're seeing a lot of activity in terms of that specific area. And I guess the concern right now has been what has been happening in the recent past, especially the volatility, just like you mentioned. We saw the shilling weakening to a very, very strong low last year. And because of that, there are a lot of players who are already coming into force. And especially when we saw politicians also trying to see whether they can be able to even regulate the situation. We are seeing central bank trying to take a position on that, which is a very good incentive.
So you see the central bank getting the shilling situation under control. Are you looking at any trading ranges right now? Do you have any forecasts in sight as to where this shilling will ultimately settle?
Well, look at it in terms of how the shilling has behaved, especially in the recent past. We should see it still remaining within the 83, 84 range. And hopefully going forward, we should be able to see the central bank being able to balance that situation. I guess the challenge right now would still be able to manage the import-export imbalance, as well as trying to make sure that even other players like banks are not able to take advantage of any opportunities that could arise, especially in terms of imbalances on that front.
Looking at the markets overall now on the equity front, we see that key technical level of 3,400 being breached yesterday. NSE 20 closing at around 3,960 odd points. What is your sense as to where the market's heading from here? Because we know that risk aversion appears to be rising in global markets, Safaricom being one of the stocks that was sold off by foreign investors yesterday. So what is your sense as to where the market's going from here? Do you see further downside pressure?
Well, looking at how the market has been performing well, it's a very good move when we're seeing foreigners participating in our market. As at now, it's a very good indicator that there's interest in terms of how the market performs. As we are getting into the second quarter and other factors are coming into play, like we are expecting quarter one results from financials, which should be able to also create a bit of activity in terms of how the market performs, and also going forward in terms of other earnings reports from industrial counters, and even some factors that are already in play, like the Kenya Airways rights issue, which might affect the market in terms of how investors participate, especially depending on the outcome of the rights. Definitely that might create a lot of activity in terms of how the market performs going forward. But in terms of the sustainability of the rally, I guess that might be a concern, because we are now heading towards the general elections, and during this period there's a lot of uncertainty that definitely affects how the market performs.
Looking at that Kenya Airways rights issue, which is underway right now, we saw rights being traded yesterday at around 5 cents, 82,900 Kenya Airways rights traded. That's sharply up from where we saw last week, Thursday, 8,800 rights being traded. What is your sense as to how this ultimately is going to pan out for Kenya Airways? Do you think that they're going to raise the amount of money that they're looking to raise?
Well, from the indications that are already coming through, especially in terms of the institutional front, they have been able to get a lot of commitments, which are very, very positive. And the numbers that are also coming through in terms of interest, especially on the retail front, is the only concern right now, especially because of just what you observed. The share price is already trading below rights issue price, and even the rights issue themselves, the way they are trading in the market is slightly low. And looking at how the demand-supply situation is at the moment, is also a lot of supply, which is also trying to depress how the rights issue is going to perform going forward. But in terms of the institutional support that they already have, which is very good, and even the fundamentals that are supporting the share, especially in terms of their long-term perspective of the rights issue, definitely going forward, it might be something that might be able to perform well. But we are right into the second week now, and hopefully maybe as we go towards the closing of the rights issue, it might be clearer in terms of how the outcome is going to be.
Samuel, but overall though, I mean, would you be exercising your rights? Would you be increasing your stake in a company like Kenya Airways, which has so many pressure points, the airline industry as a whole, of course oil being one of the key issues really, but a lot of issues when it comes to the operating expense side of the business, and many investors don't want to play in this space given all the pressures that they face?
Well, definitely, I would be a very cautious investor if at all I was to get into the airline industry, especially just like you observed. You're seeing the volatility of fuel prices affecting how airlines perform, and even other challenges like what is happening in Mali affecting how some of these companies perform, which are slightly beyond their control. But look at it, especially particularly in terms of Kenya Airways. The company has been fairly stable in terms of how it has performed, especially in the recent past. And looking at it in terms of this rights issue and the plans that they have, fundamentally the company looks very promising in terms of how they're going to be able to still sustain their performance going forward. But just like you mentioned, some concerns that we might have, like the volatility in terms of the areas they operate in, definitely creates a bit of a concern. So I would be a cautious buyer at this point.
One of the other sectors that's in focus at the moment is, of course, the sugar industry. We know that a new sugar plant is going to be constructed in the next few weeks, and that's going to be commencing after a 6-month delay. It's a joint venture between Omnicare, the Mauritian-based sugar company, and local investors. Kiskul, what are your thoughts on the changing landscape for sugar producers in Kenya right now, in light of the fact that you've got new production coming online?
Well, definitely sugar has been one key commodity in Kenya that we have been watching very clearly, and looking at Mumias Sugar, which is already listed, and how the company has been able to perform. I guess the concern right now is that yes, the demand for sugar in Kenya is fairly high, and even the local producers are not being able to meet that demand. But look at it in terms of our operational efficiency. That's one of the areas that we have not been doing very, very well, especially in terms of competitiveness within the industry. Being able to set up a new plant, I guess the challenge will be to make sure that we set it up and you're able to produce sugar at a competitive rate, because right now there's still the concern of COMESA, and once that market is opened up, we might not be able to remain as competitive as a country. But looking at it in terms of how industries and companies are trying to position themselves, especially in terms of these new industries that are coming up, definitely in terms of ensuring that they're able to get sugar that grows within a very short period and is also able to produce within a very low operating cost, definitely will make Kenya's production become a bit more competitive. And so I think going forward, the sector is still a sector to watch.
In terms of share prices, though, in Mumias Sugar sitting with a PE of 3.69, looking really cheap there. Is that a good entry point? Would you be buying the stock at the level it closed at yesterday, or too many concerns around the changing landscape and competitive environment right now?
Well, look at in terms of the PE, just like you observed, that is fairly low, and definitely that's one stock that somebody can be able to take a position on, especially because with a PE of 3, definitely that's a stock to buy. But look at it in terms of the uncertainty, which I guess is what is reflecting in terms of how the investors are already viewing the stock. I guess the concern would be to just buy into, but we are a bit cautious, because definitely going forward, the landscape is still a bit uncertain, especially in terms of the numbers that we are seeing coming forward in terms of how the sugar sector has been performing. But also we are hoping that this year's output might also be able to be good enough, hoping that the range will be sustainable.